Hi, and welcome again to another edition of Market Analysis for today, January 21st of 2025. I'm Gio Benacourt. This is a recording by Vantage Markets right about 2 hours prior to the U.S. session market open. All right, well, hey, the start of a golden age of America, as President Trump said last night on his inauguration speech. A lot more things are coming over and more things are going to start changing. One thing for sure is that the rhetoric around energy is going to be bringing a lot of volatility into the markets. So therefore, things are going to be changing, are going to be dramatically moving as we begin this new era. Let's just start talking about what we can speculate for the indices in this new era. Take note of this swing here during the London session. Obviously, yesterday was quite a quiet day. There was fluctuation into it, but it was quite quiet today. The market, just dropped below the 20-day moving average within the 1-year band. Now, this drop, but then again, also its recovery within the same trading session, which is the London session. It's just one way for that I address this, so I analyze this as, is that there was a lot, obviously, a lot of selling going into that trade. Obviously, profit taking for those who have been staying long since last week in the contract, obviously having this deals, and they should want to rebalance their positions. Okay, now will this imply that the market is going to start trending lower for that? It could be, but again, remember that we are in the fourth quarter profit or the session reporting. Okay, so that's going to be the earnings season. Okay, so that's going to bring obviously volatility to the markets. So taking a look at the Nasdaq from that high, and let's just try to use a trend line. We see that the market has broken last week, really, that trajectory. Okay, and it's looking to a trade higher. So in these scenarios, there's some tools that we can use just to kind of draw up a path, a road into the future where could market fluctuate towards, and that could be used as a pitchfork. We want to be able to measure a complete movement, prior movement, then identify a place where the market has stopped, but also looking to begin a new trajectory. So from this swing low to the swing high here, back to the swing low. So we're trying to use the tool at the beginning of what could be a new path and obviously a new trend. Obviously, we are looking that the market is moving higher, yes, but this particular candle is a doji, so dojis identify themselves as probable change of course, right? Reversal, balancing itself out. The market could be balancing itself out to continuation of that trajectory. So the shift, the pitchfork shows us a center line. Okay, and then gives two standard deviation channels, if you will, as resistance and then as support. And then the market has a tendency to fluctuate above and then rebound back towards the medium of this candle or of this tool. Once it's above it, and once it's below it, it does the same. It could be used as a probable level of support where the market will come back towards this and to this medium line. Now, one thing that you also want to take a look at is how steep the tool has been drawn. If you take a look at this is quite steep. So you could change the type of tool that you're using, a original or a shift. And then a shift gives you more of a sense of, okay, that trajectory or that angle looks more in tune with what the market could be doing. So therefore, let's just use that one. And here we want to be able to understand that the market will have a tendency to obviously use this line as a resistance. So when it is towards it, it'll rebound back to the medium line, and then reverse and try to take out the swing high, the previous swing high, continues to the top, to the upper band, and then reversal. And then that's when you obviously will adjust the tool. But so far right here with this angle, we can use it as probable levels of where the market, or resistance, where the market could probably come in and find that resistance, right? So initially, what you want to do, you want to be able to use levels, previous levels, where the market has made a previous resistance, like this area right here, which basically where I have my resistance, and the second one is somewhere up here. So you could use that just to give you an idea of where the market could be trending towards. So as far as the speculation of where the market could be trading today, well, I'm going to leave the same level of support, the same level of resistance, and we're looking for a trend higher, okay, a continuation of this. Let's see how the market will react to Trump's first day in office after signing over 100, just 100, what do they call those? Just new laws, reversing a lot of them, a lot of what Biden did right before leaving office. So that's as far as for the NASDAQ goes. So let's see if today will be the market will see Trump with a bull market run. Then here the S&P actually fluctuated above our levels. So initially, the first level is going to be this one of resistance, okay, and that swing high is going to be the second one, because that's the highest it's been. That's the all-time high. So as far as support, let's use a 20-day moving average as support, and then the second one could be right around this level right here. Boom. There we go. Okay, so hey, it's looking mighty strong. The S&P. So let's see, going long for the markets. Let's see how the markets will receive Trump again. Dow Industrials 44,400 looks like a level of probable level of resistance, and they just use that all-time highs as also as the second level of resistance. As far as support, the 20-day and the 50-day moving averages for the Dow. Again, let's see how they move. I'm going to speculate higher. All right, so here a little thing about energy, but the crude oil market. So Trump wants to drill, baby, drill. Therefore, that means that he wants to obviously increment the supply to the market's demand. Whether the OPEC go back go back about doing their cuts or not, because obviously if they do the cuts means less supply, price move higher. So Trump understands that the price of crude oil has an effect on inflation, and it's already starting to make some numbers, thrown out some numbers by his administration, the people that he has in there, that a $50 crude oil will do the job. So will this moments of higher crude oil prices, is it over? And are we going to start just seeing a retracement on the on crude oil? Are we gonna just start seeing crude oil just reaching that high and just start looking for levels to probably do a reversal, or just levels, this zone area, this part right here, where the market just looks to trade below that and just continue its trajectory towards 69, which is basically this level right here, around here, 69.70. So we have right now a good zone of where probable level of support is going to play a key role in crude oil. So let's just use those levels, which it makes almost the same as the spread between the 20 and the 50. So $50 crude oil, we'll see that in this administration, but so far it is trading lower. So let's see what will happen. Then we have Nat Gas. Nat Gas, I think in Nat Gas run right now is looking to be exhausted. It opened with a gap down. So will that continue? Let's use this low here and then this low here for support. As far as resistance, let's use this levels right here and this level right here. So still cold weather, so demand is going to be there. So let's see what will happen. Let's see how is it going to deal with Russia and things like that. So gold making all-time highs again. Looking for it. So will we reach those levels again? So 2760 is somewhere out there. 740 support 2700, and then just swing low from yesterday. So let's see. RSI is it's getting closer to entering over bought territory, but still room for more movement to the upside before it does. So going long, uncertainty has just really started with Trump's starting in as president. So let's see what will happen with him. This low for silver. Silver, you could perhaps take a look at, contemplate silver by the other year at $38. Gold at 3,000. So the metals are going to be a good place to continue finding opportunities. Copper is just retreating strongly. So 50-day moving average as our first level of support and the 20 as our second one. I'm going to use 350 as a level of resistance and just the upper Bollinger Band. But let's see if it continues to trend lower, will it rebound off this 50-day moving average? Bitcoin with those such a strong swings that he has by the thousands. So let's use the upper Bollinger Band and that swing high as resistance, the 20-day moving average as our first level of support. And then let's just use this levels right here as our second one. Let's see if it'll do another run to the upside. The currency, the euro, it fluctuated higher yesterday, but it's in the red now. So 105 seems to be the target for it. Let's use this level right here as a first level support and the lower Bollinger Band as a second. So it's trending lower. See if the dollar index continues to make a strong move to the upside or not. The pound as well. Let's use the 20-day moving average. Let's use 225 as target for the week. Let's use the lower Bollinger Band, which matches the that swing low from last week, and 120 as our lowest level of support. Let's see what will happen. And the dollar index is looking, it had a very, very negative move to the downside yesterday, as we see in here. Let's see if it recover it, because it did open with a strong gap up, almost halfway of yesterday's fluctuation. So indication that the dollar index will gain momentum to the throughout the day is building. That's it for today. Have a great trading day. I'll see you tomorrow.